All right, guys, we're going to talk about Alibaba's stock today and whether or not it could be a multi-decade compounder. So first and foremost, let's just catch up on some of the news here with this stock. We're on TradingView here. We're going to look at the technicals. So just to begin here, we've been in a nice little pullback here for the last few months here, but we're starting to bounce pretty nicely here. We bounced off the 200-day moving average, and now we're hanging above the 50. Now, if we get good earnings on Friday, I strongly believe that we will begin to challenge this local top here. So this one sort of 48 level will likely challenge really quick if we get a solid earnings report, if we get a beat on the top line or a beat on EPS, or of course if cloud AI growth continues to accelerate at a pace faster than Wall Street expects. So I would say the technicals are looking pretty good here. I think that we are in a very clear uptrend at this point. We have very well established an uptrend on the chart, on the daily chart. But the good thing about it is it's not euphoric. It's just a nice little grind up. It's very gradual. It's a very gradual grind up. But I would say that at this point, the lows, the bottom is confirmed, right? We are in an uptrend on Alibaba stock, and it is just the beginning. So if you haven't bought shares yet, good news is you are still early. There's still plenty of time to get into the stock. And in fact, now is not even a bad time because we are in a little pullback, which is great. From this local top back in March, we're still down about 17%. So if you're looking to add shares or open a position for the first time, now might not be a bad time just from a purely technical standpoint. Now, of course, nobody knows what's going to happen with a stock price. It can go up or it can go down, but just purely from a very basic TA perspective, it's not looking too bad. But to go into the financials, which is where things get very interesting, we're just going to look at the numbers here and put things in perspective. Now, a lot of people get caught up in price action, which is very common. It's kind of like a human psychological ailment that we have to overemphasize price action, short-term gratification, things like that. But if we were to look at the big picture here and just look at total revenues for Alibaba stock, we can see here that it's it's pretty much up only. It's up and to the right here. Um, 2019. 2019, 376 billion, 2020, 509 billion, 2021, 717 billion, right? You can see that every year revenue with Alibaba goes up. It is up and to the right, just a nice climb every single year. And despite all of the negative price action that Alibaba has experienced a few years ago, there was never a decline in annual revenue, which is very interesting. Now, if we look at the stock price, you would think that, something disastrous happened, which, well, to be fair, the situation wasn't the best. The stock did go down for a reason, and it went down 82% at its worst. But 82% decline when the revenue has only gone up, no decline year over year in revenue, is very interesting, right? Because the actual financial picture does not look nearly as bad as the stock price. And that is perfect because that disconnect creates an opportunity if you are a value-oriented investor. If you are a long-term investor and you want to position yourself early in a company with strong fundamentals that's trading at a reasonable or even low valuation, this is exactly the kind of setup that you need to be looking out for. So, of course, that is revenue. So we are going to move down to operating income. So we had revenue. This is operating income. Now, same thing with revenue. Operating income is just going up and to the right. A little bit more volatility here, especially in 2022, which is the bad year for Alibaba. That's when things really went south. But, stock price went down, 80% and, just operating income just pulled back a little bit, 109 to 96. Not a huge decline. Stock price was down a whole lot more than operating income was down. But now look, it's accelerating, right? 147 to 193. We have a very clear acceleration now. And this is 2026 estimates. So keep that in mind. That's forward looking. But as you can see, revenue or operating income is expected to really kind of explode here next 12 months. So that is very interesting. So operating income, and we can move down now to let's find EPS. We'll do EPS here. So yes, EPS. Nice little chart here. Again, 2022 was the bad year, as we can confirm in the stock price. That's, you know, kind of end of 2020 is when things got bad. And then 2022, that's when, things, that's when those losses kind of really began to get ridiculous. But yes, 2022 was a tough year for the stock price. But nevertheless, you can see EPS rebounding strongly now. And 2026 estimates have EPS at an all-time high. So you have revenue all-time high, you have operating income all-time high, and you have EPS all-time high, right? So all the actual underlying fundamentals are doing quite well. But you can buy the stock right now, still down 60% from its all-time highs, which is a very intriguing proposition, as I mentioned earlier. There's not a lot of companies that have this setup. It's very rare that you're going to see, a business posting record numbers across the board, but yet have a stock price that's down 60%. And the reason for that is just Wall Street doesn't really like China. Wall Street is focused on, the Mag 7, the big US names like Nvidia, for example. And a lot of these Chinese equities are getting overlooked by the market. Thus, they trade for lower valuations. But of course, the market tends to be shaken up every now and then, right? You have a particular group of stocks that are hot for a while. A bunch of people make money. And then eventually, those stocks cool off. And Wall Street begins to focus on a new batch of assets. So ideally, what you want to do is you want to position yourself early and front run these rotations. Now, foreign stocks have not been very hot the last few years, partially due to higher interest rates. But now, of course, we have interest rates coming down. We're getting a rate cut in September because generally foreign assets, foreign equities are viewed as a little bit more risky. So when you have higher interest rates, you just have a more risk-off environment. So foreign equities tend to demand a lower multiple. But rate cuts are now confirmed. We're getting a September rate cut. So it's very possible that we might see a bit of capital starting to trickle in to some of these assets, predominantly Chinese assets, like Alibaba. And even like these valuations. So, trailing 12 months PE ratio is 16.6. And keep in mind, this is a company that's expected to grow at about, I believe, 9% next year. So you're getting 9% growth, and on top of that, an accelerating growth rate for a trailing 12-month PE ratio of 16.6. Now, on a forward basis, we have 14.2. So a little bit lower on the forward basis. So, and of course, that implies that, the numbers are improving. That's why the forward PE is lower than the trailing PE, right? Because profit is rising. So that's good to see. And this is a very low valuation, right? 14.2. But then, of course, like Alibaba has a lot of cash. So then when you look at the valuation from a standpoint of equity, let's see where this metric is. Let's see. I'm not seeing it here, but anyway. So essentially, because Alibaba has a lot of cash on the balance sheet, we can pull it up right here. That's a cash flow statement. My bad. cash and cash equivalents here, 145, that'd be billion, I believe. Yeah, 145 billion. And with a total debt, so yeah, total assets 1.8 billion. And you've got total liabilities of 714 million. So obviously there's a lot of cash in this balance sheet. And so the PE to enterprise value is actually lower than that sort of 15 number that's shown. So you have to take that into consideration. But realistically, as I'm saying, Alibaba is a very interesting stock because you have an accelerating growth rate, you have a low multiple, you have record revenue, profit, EPS, all on the board, but you still have a stock price that is down 60% from the all-time highs. And just again, looking at the chart here, you can see that we are finally starting to form an uptrend. So I would say at this point, the uptrend is pretty well confirmed, but it's still early because despite this uptrend, we're still trading where we were at 3 years ago in 2022. So if you are looking to get an Alibaba stock, now's an interesting time to seriously consider it. And if you are an existing shareholder, you're probably pretty well positioned here for a nice little rally here. But of course, nobody knows what's going to happen. But I am personally invested in this stock. It's quite a large position in my portfolio. And it's honestly my favorite holding. Like I have very high expectations for this stock over the next 5 years. And I guess I'm just looking forward to what it brings. All right, guys, thanks for tuning in to this video. If you like Alibaba related content, subscribe to my channel because I'll be making more videos. Thank you.